Good morning, good morning, good morning. It's it's Monday, the 28th of October. And here comes Mr. Brown. Bum, bum, bum. You there? Come on down, Mr. Brown. Morning, Tom. Morning, Zach. Morning, James. Morning, Dominic. Morning, Solomon. Morning, Stephen.
Good morning, Ryan. Good morning, everyone.
Good morning. Good morning. How are you?
I'm very well, mate. I'm slightly disappointed you didn't like my eel puns, but
I don't like any of your puns, let's be honest.
That's very true.
One
Very
second.
true.
Let me just read the legals out the way. Nothing discussed on this basis session constitutes trading or investment advice, or infers any kind of endorsement by PIQ Global Limited, Traders PIQ or PIQ Suite, or its affiliates, including the hosts, which as always is Mr. Michael Brown and myself, Mr. Ryan Paisley. Did you have a good weekend?
I did, mate. Yes, I did. Punctuated by breaking news on a couple of occasions, but yeah, not too bad. Lots of rest ahead of what is going to be a very, very busy next fortnight or so, I think.
Yeah, it does feel that way, doesn't it? And then hopefully
Yes.
Christmas markets kick in from about the election onwards.
Well, fingers crossed.
But I suppose for you, to an extent to me, it doesn't really matter if people are actively trading because the news is still going to be coming. That's probably one of the reasons why people won't be trading. So you're going to be busy regardless.
Indeed, that was a little bit sort of Chuckle Brothers-esque, that wasn't it? To me, to
Yeah,
you,
to
to
me,
me,
to
to you.
me, to you, to me.
Let the listeners put in the comments who's Paul and who's
Well, one
Barry.
of them's dead, so.
Oh right, well, I didn't know that. I was thinking one of them's short, so he could be you, but
Oh, I
he
know.
might be the one who's brown bread.
I was under the impression that we landed on Bert and Ernie for our comedy duo, but yeah, maybe I'm wrong.
Oh right.
But anyway,
Shall we
go
get on to more
on. Yeah,
important
crack
matters?
on. Why not, mate? Why not? Fuck it.
Yeah,
Let's go for it.
indeed. Right, let's do that. Good morning, everyone. Welcome to a new trading week. Very quick recap of Friday. It was a relatively subdued day, which was just as well, really, because both Ryan and I spent most of it in the pub. The S&P 500 ended the day pretty much flat. We did have some strength coming through in the tech sector, though, with the Nasdaq ending the day up by around about 0.6%. Nevertheless, the S&P ending the week with losses of about 1%, which was the first weekly decline in 7. I think that's more to do with a little bit of risk being taken off the table ahead of, as we alluded to, a very, very busy fortnight ahead, as opposed to any sort of dent in what is still a very, very solid medium and longer term bull case for the US equity market. In terms of markets elsewhere, as I said, relatively subdued to end the week. We did see yields tick marginally higher as the curve steepened, with 10-year yields rising by 4 basis points and trading north of 4.25%. And we see a little bit of selling pressure once again across the curve in early trade this morning. As yields rose, the dollar continued to gain broadly against most G10 peers, with the dollar index ending the day about 0.25% higher and ending the week north of both the 104 figure and the 200-day moving average, which from a technical perspective, of course, sets things up relatively promisingly for another strong week this week. And we saw gold gaining ground on Friday as well, with the yellow metal rallying by just half of 1%, not quite managing to set a new record high, although we are again trading a little bit firmer early doors this morning. In terms of data and news catalysts, to be honest with you, most of it came over the weekend when markets were closed, which I'll get onto in just 1 second. We did have some data out to wrap up the week, though. We have the latest business climate data from the IFO Institute in Germany, the index rising to 86.5 in October from a prior 85.4. So that rare, lesser spotted thing, which is a bit of German data, which is better than expected, although it is still at a relatively depressed level, of course. We also had a few bits and bobs from across the Atlantic on Friday as well. Canadian retail sales rose 0.4% on the month, although this data is for August, so it is very, very stale indeed. In the United States, we saw durable goods orders. They fell by 0.8% in September, marginally better than the 1% decline that participants had expected, but considerably worse than the stagnation that we saw in August. And we also had consumer sentiment figures from the University of Michigan, which not only saw a headline upward revision to 70.5 from the preliminary 68.9, but we also saw 1 year ahead inflation expectations, which is something the Fed look at quite closely. That gauge fell to 2.7% from a preliminary reading of 2.9, so relatively positive news there. Speaking of news, as I mentioned, most of the impactful stuff came over the weekend. Firstly, late Friday night UK time, early Saturday morning in the Middle East, we had the long-awaited, I suppose, Israeli retaliation to the Iranian missile barrage that was launched on the country probably about 4 weeks ago now, towards the beginning of the month. According to the Israeli Defense Forces, they launched a series of, quote, precise and targeted strikes on Iran. Around 20 targets were hit in total, and it's important to note that these targets were primarily military installations with no oil, energy, or nuclear infrastructure coming under attack. That is why we see both Brent and WTI down significantly this morning. Both were down about 5% at the market open when the CME opened at 10 o'clock last night, and have pretty much held those losses throughout most of the Asian session, and also into the early part of the London session as
Gold too
well.
is suffered a little bit on the back of that, bit of risk off.
Yes, lost its shine a little bit, hasn't
Oh,
it?
God! And that was one of the awful puns we specifically mentioned on Friday in the pub.
Indeed, and that's why I just squeezed it in. It does seem at first glance as if this could be a little bit of a repeat of what we saw in April, where we see strikes to kind of save face rather than to escalate tensions any further. As far as the US are concerned, Biden was saying that he hopes this is the end of the matter. And if you listen to some of the language, although it's still pretty punchy, particularly coming from the Iranian side, none of the language thus far is sort of steering towards a massive further retaliatory
Just
attack. Although, of course, we will continue to
Yeah,
monitor that
just on
closely.
that, because I've got a few lines I might as well cross off now, because now we're talking about it.
Go on then.
Yeah, so just a few things to note. Exactly what Michael said, obviously. As usual, we get some Iranian ministers saying that they won't respond. We have some saying they will respond. It kind of depends how hardline they are. And obviously, when we've got reports as well coming out that Khamenei, the Ayatollah, is seriously ill. So there will be even more political kind of shuffling going around there, where people try and line themselves up for the death of Stalin kind of vibes. If anyone's seen that movie, very good movie if you haven't watched it. But one thing that came out this morning after Iranian officials saying they won't look to attack is that the Iranian Foreign Ministry spokesman said on Monday that they will use all available tools to respond, saying that the nature of response is linked to the form of aggression that Iran was subjected to. Bear in mind that we've had previously that this will go on for like 4 weeks before anything happens. So don't get your knickers twisted just quite yet. One thing to note though is Walla News are reporting Israel. You're right. Walla News reported that Israel actually warned Iran before the attack and asked it not to respond. Nice and polite of them. But also of note,
That'll do the
yeah,
trick, won't it? We're going to throw a fuckload of missiles your way, but please don't send any
It, it
back.
it
Okay.
does strike me as odd though that they still managed to do all of this even with a bit of prior warning. Israeli military officials as well said that they did not rule out the use of the air force going forward, and this obviously fits in with the fact that Israel has reportedly hit all of Iran's air defense systems, especially ones like protecting critical energy facilities, increasing Iran's vulnerability to future attacks. So yeah, hopefully this has put a lid on it for now, and we're not seeing anything immediately saying otherwise, but obviously this is the Middle East, so anything could happen.
Indeed, yes, and
Oh,
of
just quickly
course,
on whilst we're talking, we might as well
Oh God.
we might as well tick off this though. Obviously at the moment it's where we've got OPEC Plus discussing delaying the oil output increase. If they do delay that, then that might put a bit of a bid into, or at least some at least put some bids there to be eaten up in the oil market if they do decide to delay the start of their output increase. But on the back of what we've had over the weekend, we've also got City lowering their Q4 Brent forecast to $70 from $74. So a bit more colour for you.
That's a very good point. The other thing that happened over the weekend were elections in Japan, where the Prime Minister Ishiba, after 1 month in the job, is making Theresa May look like a shrewd political operator because he is losing the LDP-led coalition's majority in the lower house of the Japanese parliament. Of course, for those who are unaware, the LDP in one form or another have been ruling Japan since pretty much 1950, 1955, something like that. A bloody long
Bloody
time,
long time.
basically. The reason why they have lost this majority is because the electorate in Japan are up in arms about a political funding scandal. Effectively, what's been going on is around about 3 million quid, 500 million yen in fundraising income somehow managed to find its way into what are being called slush funds, which then somehow found their way into being paid out to senior ministers and officials in the Japanese government, which sounds as dodgy as it is, to be completely honest with you. The long and the short of it, though, is that the voters have obviously spoken at the ballot box and rejected the LDP. They are still the largest party, so they are likely now to begin coalition negotiations with other parties in the Japanese parliament to try and form a government. Of course, we will see whether that is a government that Ishiba manages to lead. He had 5 attempts at winning the LDP leadership before he won it towards the back end of September, and he might now be done and dusted after about 6 weeks. We will obviously wait and see on that one. The yen has reacted pretty poorly to this news, of course, of increased political uncertainty, trading around about 1% softer. Dollar yen at 3-month highs north of the 153 figure. The other thing to bear in mind, although the Nikkei has rallied, that seems like it's more just a function of the inverse relationship with the
Yes.
currency
I
as
think,
opposed to
yeah,
anything else. So I
I
don't
think
think that's a signal of
as
optimism.
Nomura said, like if the LDP did lose their majority, the majority and the coalition even, it would be a sign of their Nomura's words was sell Japan, and I think that's exactly what we saw on the open. Right, the knee-jerk reaction was like the true kind of where we think, and
Yeah.
then the fact that the Nikkei then rallied its tits off. Technical term for you. Nothing to do with faith in the Nikkei. It's just the fact that it's a lot cheaper in dollar terms, and that's where most of the flow comes from.
Exactly that. And of course, the other thing to bear in mind is, and we'll go on to the week ahead momentarily, but we do have a BOJ decision on Thursday. They weren't likely to tighten policy anyway, but they're pretty much
Yeah.
guaranteed to do nothing now. The big question on participants' minds is how long does this uncertainty drag on for? And does it mean that a potential December BOJ hike is also off the cards? And if the market does obviously come round to that view, then you would expect further downward pressure on the yen as a result. The other story from over the weekend, I told you there was a lot of news going on. This was Bloomberg running this late last night. Boeing, there's been talk of Boeing doing a capital raise for quite some time now. Obviously, they've got all sorts of issues, namely the fact that their planes fall apart and that their workers have now gone on strike and don't want to build the planes that fall apart because they're not paid enough. Boeing are apparently going to be doing a $15 billion capital raise. That could come as soon as today. It's likely to be a mix of equity and credit, but do just bear that in mind in terms of Boeing stock. We're in terms of the pre-market session, which due to the clock change is already open, and I hadn't realised that. So I can tell you right
Bugger.
now that Boeing is trading about 1% softer pre-market as a
Just
result of those
little
plans.
fact for you on that, so I can cross it off my sheet as well. It's the fact that.
Well, you can go on to your sheet in its
Oh,
entirety, actually,
okay.
because
Well,
that was
thank you for
it.
that. I have just. Well, let me just check. I have done it. Yeah, I just did post up a little interesting read from Reuters on Japan and possible implications for BOJ policies. To give that a read if you're a bit of a nerd. Anyway, just on the Boeing one, it will be the largest share sale since SoftBank's T-Mobile stake sale in 2020. There you go. That's on the Boeing one.
Oh.
A bit of insight for you there, a bit of deeper colour. Right, I can cross off all of that because you covered all of that. Right, so in macro news, so obviously as always, this is from our friends Andrew, obviously Zach, who publishes the overnight news roundup that PIQ does. So make sure you check that out. That will be going out as soon as I finish this. And of course, Newstalk, which you can access via PIQ Suite. So, in commercial real estate and banking news, US banks are currently sitting on a reported $750 billion worth of losses on our real estate debt. And that's 7 times larger than it was in 2008 when the housing bubble popped. So, ugh, rather you than me. And in terms of everyone's favorite subject, the death of the dollar, the US dollar's share of global payments hit 49%, the most in 12 years, according to the SWIFT data. Over the last 2 years, US dollar usage in international payment transactions has jumped by 9%. One thing to add to this, it's actually more than that, but obviously this is only SWIFT data. So yeah, it's one to watch. So especially for those claiming that the BRICS are going to come and take on the dollar.
Oh,
Good
yes.
luck with that. In US consumer news, a record $628 billion in US credit card debt is now unpaid or rolled over every month. Over the last 3 years, revolving balances have jumped by 204 billion, or 52%. One for your rate. I'm sure there's a pun there, but I can't make it, and I'm going to move on quickly before Michael Brown makes it. China's industrial profits plunged in September. They're now down 27.1% year on year, recording the steepest monthly decline of the year due to factors such as insufficient demand and sharper decline in producer prices. Yep, both of those things will do it. PBOC launched a new reverse repo tool this morning to inject more liquidity into the market and support credit flow in the banking system ahead of the expiration of trillions of yuan loans at the end of the year. Barclays are saying that in the event of a Trump presidency, which could lead to a full-blown trade war, China may contemplate larger stimulus package at its November 8th policy announcement. But their base case is an incremental $2 trillion yuan figure. Just on that, what I've read from other banks and institutions is that if Trump does get in, there's every chance that China delay policy announcements because they want to give Trump time to settle in and work out what Trump's going to do before they start announcing policy decisions, which does make a lot more sense than just announcing a day after he gets in, if he gets in, than what Barclays are saying. So I'm going to make Barclays wrong there, but we'll see. Speaking of China, Chinese hackers have targeted affiliated phones affiliated with the Harris campaign, in addition to Trump and Vance. So that's going to probably get some news from both sides of the political spectrum in the US. The US has approved a potential $2 billion arms sale package to Taiwan via Raytheon Technologies, and this includes for the first time. Oh, this includes for the first time to the island an advanced air defense missile system battle tested in Ukraine. Mood in German, so moving away from China. Hold on a sec, someone's stop. 1 second, someone keeps messaging me.
I was going to say, can you tell whoever that is
Yeah,
that you're busy?
1 sec. Hang on.
Just talk amongst
Yeah,
yourself, listeners, while Ryan deals with someone more important than us. Don't worry.
1 sec. Sorry. My favourite topic. My favourite topic. Germany. Well, also my favourite topic, really, German bad data. Mood in German export sector is darkened further, according to the IFO. Um, the mood in German exports industry darkened further in October, with the automotive and metal sectors anticipating the heaviest losses in international trade, according to the results of the survey that was published this morning. To quote Big Klaus, the head of the IFO surveys, is me that names him Big Klaus. His name isn't really Big Klaus. Companies are not currently benefiting from the positive economic development in other countries. So yeah, the outlook for Germany darkens further. Obviously, we've got strikes this morning on Volkswagen plants in Germany, because over the weekend Volkswagen said that not only are wages not going up, but every chance that they get cut. So one to watch there. We will definitely see some more negative headlines coming out of Germany. Just for your guide on that, Volkswagen are looking to cut wages by 10% and a 2-year wage freeze on the ones that they don't cut. So that apparently will save €4 billion. That will be fun trying to get that past the union. So good luck with that. Speaking of single stock names, Microsoft consider Bitcoin investments in December, despite the fact the board opposed the move. So expect frothy knickers from the crypto crowd. Analysts warn that Tesla's special relationship with China is likely to be tested if Trump wins the election amid Musk's embrace of the Republican nominee. And finally, some chip news. TSMC founder Morris Chang said the company will soon face its most severe challenges in driving growth at a time that the US is controlling the flows of cutting edge chips to China. And they go on to say that TSMC has been expanding its presence on the Japanese island of Kaishu, known as Silicon Island, with total investments now topping $30 billion from a slew of chip companies. So some positive news for Japan to end my little section on. But yeah, back to you in the studio.
Well, thank you, mate. Let's turn to the week ahead, already the next fortnight, because it is a very, very busy next 10 trading days or so. In terms of this week, which I'll go into in a bit more detail momentarily, there's plenty going on. We've obviously got the budget here in the UK on Wednesday. As I alluded to earlier, we've got a decision from the Bank of Japan. We've, of course, got the latest US labour market report on Friday, and we've also got 5 of the Magnificent Seven reporting earnings. And then, of course, moving into next week, we have the big one, which is the presidential election in the United States, as well as policy decisions due from the FOMC and the BOE. Plus, another one that I just found out about this morning is that the Great Unwashed are on their way to the City of London once again. No, I don't mean Ryan's coming up here. The Extinction Rebellion people are out
Are
in
they
force
still around?
protesting this week. So apparently so. So if anyone is in the city, then keep an eye out for them and maybe lob something at them. In
Yes.
any case, moving on to this week, it is a relatively slow start, although things do get pretty busy pretty quickly. Today's focus will be on 2 and 5 year supply from the United States, and we also get the initial financing estimate from the US Treasury as part of the quarterly refunding announcement. Of course, as I made the mistake of a moment ago, UK clocks have gone back over the weekend by 1 hour. Clocks in the United States have not just yet. So the London-New York gap will be 4 hours for this week only, meaning the cash open is at 1:30 and the cash close is at 8 p.m. Moving into Tuesday then, on the data front, we get the JOLTS job openings report for September. Openings set to tick marginally lower, but of course this data does not have much bearing on the labour market report or the non-farm payrolls print that we get on Friday. And on the earnings docket, it is a busy one, highlighted by after-hours reports from Alphabet, aka Google, and AMD, who are, of course, a big player in the chip sector. Wednesday, we have inflation figures due from Australia. We also have the Chancellor delivering the budget, where, of course, we're likely to see up to £40 billion worth of tax hikes and spending cuts to plug this supposed black hole, as well as a change to the way that we measure debt here in the UK to try and give more fiscal headroom in order to engineer greater investment into the economy. Also on the data front, we get the latest read on GDP, the Q3 GDP figure from the United States, where the economy is set to have grown at an annualized rate of 3% on a quarter-on-quarter basis, and the earnings docket is again busy, highlighted by after-hours reports from Microsoft and Meta. Into Thursday, we've got a policy decision from the BOJ, where, as we were discussing earlier, political uncertainty should see policymakers leave everything unchanged, with rates remaining at 0.25%. On the data front, we get the latest inflation figures from the Eurozone. Headline CPI seen 1.9 from a prior 1.7%. But the core CPI figure, that should come down to 2.6 for a prior 2.7%. We also have the latest core PCE figures from the United States, further disinflation expected there, with a print at 2.6 from a prior 2.7%, as well as the weekly jobless claims report and the Q3 employment cost index. Again, a busy slate of earnings on Thursday, highlighted again after hours. We hear from Amazon and from Apple, as well as from Intel. And then the week wraps up on Friday with another busy day, highlighted by the latest US employment reports. Of course, downside risks are quite chunky to this employment data, given the fact that hurricanes Helene and Milton likely are skewing the figures lower. Headline non-farm payrolls, as a result, expected to have risen by 110,000 for a prior 254. Unemployment expected to hold steady at 4.1%, while average hourly earnings there seem rising by 0.3% on a month-on-month basis. We also have the ISM manufacturing figures due out of the United States on Friday, and in certain European countries, Friday is a public holiday, so do just bear that one in mind. And of course, the market will continue to monitor political developments in Japan, geopolitical developments in the Middle East, and increasingly focus on political developments in the United States, with just 8 days now until that presidential election where Trump and Harris will go head-to-head at the ballot box. So a very busy fortnight awaits.
Indeed. Thank you very much for that, Mr. Brown. Listeners, as always, thank you very much for listening. And if you are trading this week, please take it easy. Please keep it tight. Yeah, and we will see you all tomorrow. Yeah.
We will
Cool.
indeed.
Have a good one. Goodbye.
Cheers,
See ya.
guys.
Awkward silence.